All right, let's go ahead and begin, everyone. I'm Frank Tamburino. I think most of you know me with the Harrisonburg-Rockingham Chamber of Commerce. And we appreciate everyone coming here today to hear answers, potential answers, and qualified answers to some of the questions you've got as Virginia starts reopening the economy. This came out of a couple different conversations and a number of questions that keep surfacing related to employment, liability, on financing. And rather than continue answering the questions one by one, we just thought it'd be a great idea to put this panel together, which again has a lot of background, talent, knowledge of the subject matter. It really started again just briefly with our task force. We had the task force we put together. We started talking about again, what our next steps were, how we open recovery. It sort of took a life of its own and grew out of some initial discussions and some conversations up and down 81 to a 4-county initiative. So I do want to thank everybody who had a part in this. Like I said, the Harrisonburg-Rockingham Business Resilience Task Force has been together since early March. We're also partnering with, of course, our chamber, the Harrisonburg-Rockingham Chamber, the Greater Augusta Regional Chamber, Shenandoah County Chamber, and the Chamber of Commerce of Lexington, Buena Vista, and Rockbridge County. And we've also brought into our task force recently, and we're using their Zoom today actually as JMU's professional and continuing education. So again, we thank everybody for helping with putting this event together today. And I don't want to go through everybody's names because I'll forget somebody, but again, I do want to make sure that Courtney, Tracy, and Sharon up in Shenandoah, Augusta, and Lexington, Lex Rock are recognized as well for helping put this on and doing a lot of promotion here. First, let me just go ahead and also say that this will be recorded, so you will be able to listen to it later. Of course, everybody has been muted. I was going to remind you to turn the mute on, but everybody has been muted. If you do have questions, you can go ahead and use the chat feature, and we'll be monitoring that and probably asking each person a couple questions after they get done with their remarks, and then saving the bulk to the end, again, because I anticipate having a lot of the same questions pop up. And again, we'll also have some questions afterwards that again, I think everyone will probably jump in. As I discussed with most of our panelists here, a lot of these sort of transcend individual topics. So if you're talking about liability, you're also talking about employment. If you're talking about financing, you're talking about employees and liability. So everybody will have some similar remarks as we go through it, but again, different topics specifically. And let me introduce our folks real quick, and then I'll go ahead and turn it over. And these will be very brief, so if you want to say something about yourself, go right ahead. But essentially, all I'm going to do is introduce Kathy Welsh. Most of y'all know Kathy up and down 81. She's our go-to person a lot of times when we start talking employment law with Flora Pettit. And again, we appreciate Kathy being here. We always, like I said, we rely on Kathy individually and collectively. Jeff Adams is with Walton Aldheiser and Weaver, also a law firm in town with offices in Stanton. Had to track Jeff down in Stanton the other day. And again, he's a managing partner, and again, very in tune to what's going on with the legislation that's been passed recently, particularly related to business law and the effects of, again, both the employment and the financial aspects of that. And then we've got a tag team from PV Mayors, Kurt Johnson and Derek Hess, that again are both advisors, Kurt senior advisor and Derek associate advisor. And again, PV Mayors, with a number of other accounting firms in the area, have been pretty much swamped over the past month or two, advising folks on things such as the payroll protection plan, economic injury disaster program, loans, and a few things like that. So, and again, all of these individuals will be go-to people as we move forward, and as questions just keep popping up. So with that, let me wrap my remarks up and turn it over to Kathy.
Well, hello, everybody. Anybody who knows me knows this is really a difficult format for me because when I present, I walk around, I use my hands a lot. I'm like that SNL skit about not really understanding how to use Zoom. So hopefully Sarah and Frank will keep me on track and will give me a signal if I'm not doing something right. I'm glad you all have joined us, and as you might imagine, I've been pretty busy the last several months. There's so many employment issues involved with COVID that I'm going to go through some of the highlights, and then I'm open for questions. It somewhat depends on your industry and what you're doing, but there are some generalities for everybody. So I'll just sort of start hitting some highlights, and then I think through your chat, you can send Sarah and Frank questions, and they'll see what's sort of out there, and then maybe feed them to me for some input. In terms of the first thing I think you need to be aware of, which I'm sure you are, is OSHA. OSHA is the federal agency that prescribes workplace safety. There's also a Virginia cohort of that. It's the Virginia Department of Labor and Industry that has the Virginia Occupational Safety and Health Division of that, VIOSH. And what's nice about Virginia is we don't get too froggy in terms of coming up with a whole bunch of new stuff and don't want to reinvent a bunch of wheels. So basically, Virginia OSHA incorporates federal OSHA, and that is the floor. They can do more. And so I want to talk a little bit about safety. And one thing I thought has been great during the COVID epidemic or pandemic is that the resources available online are just incredible from all of these different agencies, and they give a lot of guidance. And so OSHA's been out. They've got a lot of guidance specific to certain industries. If you haven't looked on their website, I mean, if you just Google OSHA COVID, you'll go to the website and they'll list the different types of guidance that they've issued for construction, for poultry or meat processing, and some other specific industries. So definitely, if they've issued guidance for your specific profession or industry, you need to make sure you read that and try to comply with that as best you can. I will say that I've been very pleased with OSHA's response thus far, although there are a lot of people pushing them to enact major requirements and have strict enforcement of a lot of different stuff. They really recognize that this is such a changing environment. PPE and other types of equipment, safety equipment, are difficult to obtain. There hasn't been a lot of really harsh enforcement. And they've been understanding and trying to help the business community. I have had clients receive some letters from the Virginia OSHA saying that they've received a complaint that there's not social distancing, that we're not telling people who are positive for COVID. So I have seen some beginnings of investigations, but right now it's a paper issue. They're not coming on site. And I also don't think they're going to be harsh unless you're really just completely blowing off every recommended guideline from OSHA or the CDC. What is happening, however, is other interest groups are really pushing the state government to enact more of their own regulations, and they're allowed to do that. They just traditionally haven't done that. But because we now have a Democratic majority in the General Assembly and a Democratic governor, the likelihood of that happening is higher. That doesn't mean it will happen, and I hope that chambers of commerce definitely advocate that we've got enough regulation, we're doing the best we can, to stick with what OSHA's got. So hopefully that will be the case. I will tell you that I've been very proud of most of my clients and how resourceful they've been and how they've come at trying to meet the OSHA guidance. I would suggest to you, if you have not reopened and you're thinking about reopening, definitely read the guidance, what their recommendations are. OSHA basically categorizes risk in workplaces from very high, medium, and low. My law firm is a low risk. We're not a retail establishment or a restaurant. We have clients come in, but it's just doesn't meet any of the higher risk. But determine what your business is, and there's a nice little brochure that OSHA has. And again, try as best you can to meet those recommendations. They are recommendations at this point, but you're better off to meet them. If you have trouble meeting them, for example, if you can't get masks, if you can't get face shields, document all of your good faith efforts to try. I contacted the supply company, I contacted so-and-so. Again, just keep a record that you're doing the best you can in the middle of this pandemic to provide for your employees the safest work environment that you can. Now, having just used those words, I would encourage you, because I read a lot of policies about COVID and preparedness, never ensure that you're going to have a safe environment. We don't insure anything. We can't guarantee anything. We can make it a priority. We can make our best efforts. But I don't like using sort of guarantees for that. But I will tell you that I think that that's going to be an issue, especially workplace safety will be an issue from a compliance standpoint if VDOLI and VIOSH start issuing their own regulations and they're higher than current. But we got to keep, I don't expect OSHA to do more than they have done other than to try to help and provide guidance and recommendations, because I don't think the Trump administration is interested in doing more. But you have to stay up on things. Unfortunately, right now, we all have to stay up on everything, and websites change. I had given a client guidance, and then the next day I went back to the website and something had changed on it. Luckily, I saw that, so then I updated my guidance. So everybody has that responsibility. Some of my clients worry about, and you hear in the papers about workers' comp, that is not something that I'm worried about in Virginia. So if anybody is worried about COVID cases related to workers' comp, I am not worried about that, or negligence cases that will go outside of workers' comp related to COVID. In Virginia, we have a very strong Workers' Comp Act that has a very strict exclusive remedy provision, which basically says they can't go around workers' comp to sue you. In addition, within workers' comp, you have to show that this illness that you received was received because of you were exposed to at work. It was received because of risks peculiar to your employment, and there's a couple other things that you have to prove it by clear and convincing evidence, and it's really quite hard. What I think could happen, and there's been talk about happening, is that the General Assembly may add a presumption that a COVID diagnosis is presumed to be work-related for first responders and healthcare practitioners. Currently, for some cardiac and respiratory issues, there's already a presumption, and it's a presumption that can be rebutted. But that's the most that I see that's really happening in terms of that. Everybody has workers' comp insurance. Your insurance adjusters are going to be up on how to investigate and deal with those claims. But I don't see that as a big area of risk. Hopefully, one, because our workplaces are going to be safe and they're not going to get COVID from a work-related exposure. So to me, it's more making sure you're doing the best you can to meet the current recommendations from OSHA and CDC. Now, the other piece that I think that we're going to see with OSHA is going to be retaliation claims. And so if you have a person who comes back to work because you've recalled them and they say, I'm not being given proper PPE, or you're not disinfecting the way CDC guidelines say, if you then say, that person, I don't like that person very much. I don't want that person in my, I've got so much going on. I don't want to hear that anymore. Let's just fire that person. Let's just get rid of that person. That would be illegal because if you engage in certain protected activity, under many of the different statutes we're going to talk about, you can have a retaliation claim. And so when somebody complains about safety in the workplace, that gives them the potential for a cause of action to sue you if then they have an adverse action, they're terminated, and they're able to convince a judge or a jury that it's because they spoke up and complained about it. So as fluid and as frustrating as this next couple months are going to be, you really should be talking to employment counsel before you make a negative employment decision about somebody who's been complaining about anything. Unfortunately, it's just that's the world we're going to live in. So that's OSHA and workers' comp. Hopefully, any of you with 500 or fewer employees know about the Families First Coronavirus Response Act, FFCRA. Some of you maybe didn't have to comply with it initially when it became effective in April because maybe you had already furloughed everybody. But as we're talking about coming back, if you're a covered employer, your employees are entitled to FFCRA leave for certain eligible types of leave. And so hopefully if you're a 500 or fewer employer, or I guess it's $4.99 or less. You've put the poster up, and if you haven't, make sure you've got the poster up. I've been talking to my clients who were like 525, but because of the economy, they furloughed people. And there's this gap, but you could, what if you go to 499, 498, and then you go back up to 503. The weird thing about the FFCRA is it says the determination of the employers, whether you're covered employers at the time of the leave. And so you could have 1 week not be a covered employer, and then another week be a covered employer. So I'm advising all of my clients that are at the close to 500 level, keep people on. If at all you can, it makes sense to keep people on rather than going back and forth. Or if you're going to go big. If you're just going to you're going to lay off 50 people, or so you're going to go to 450. Just before you do that, make sure you understand the FFCRA and you're ready to comply with that. The FFCRA hasn't been horrible to comply with for some of my clients. I recommend that you get the information that the IRS wants for you to get the tax credit, both because that's good for the tax credit. And I think I have certain forms that I like to use or recommend that if you use them, you're requiring your employees to certify to certain things. And especially the issue of the child care piece. People are kind of not happy if they think that somebody is staying out on FFCRA expanded FMLA leave for school care and child care if really they're not caring for their children. And so we can talk through some of those issues. But again, even the FFCRA has anti-retaliation provisions. And so one, it's a federal right, just like FMLA. That doesn't mean you're allowed to fraudulently receive it or use it, but your ability to deal with these things and navigate them is somewhat limited. So understanding it, using it, doing the best you can. The DOL has an excellent website that has 93 frequently asked questions. I actually am on it a lot, but I haven't been on it in the last couple of days, and I went on and they added 3 more. And one of them was good. It was about, can someone be on FFCRA for childcare due to a school closure after the school year's over? Like, yeah, well, what were we going to do during the summer anyway? And so what was interesting is the DOL said, no, not because once school is closed for the summer, it's just closed. But if the childcare that you used in your summers or you plan to use, like the summer camps aren't open, or if you usually had them go to another daycare center who took a summer program, if they're still closed, then they can. So I would definitely encourage you to become familiar with that website if you are a covered employer. I don't have any of my clients who asked for the small business exception. If anybody was interested in doing that or had experience with that, I'd even be interested in hearing that. Most of mine just are complying with it. Or some of them are able to be healthcare providers or emergency responders, so they don't have to. So you're going to have to deal with that. Then another issue I've been dealing a lot with is WARN, and that's going to continue, and that's the federal statute that deals with layoffs. And you have to be a covered employer, which is usually a larger employer of 100 employees. And with all of these different statutes, who you count, which heads, and how, is it part-time, full-time, I definitely recommend you talk to your own legal counsel or just any employment attorney to sort of help you figure out that. Right now, most of my clients have not given WARN notices because even if they're a large employer that would normally be covered by WARN, because they're hoping that these furloughs and layoffs are for 6 months or less. However, under WARN, there is a provision that once you become aware that it is going to last for more than 6 months, you really should give a WARN notice. So if some of our clients who laid off the right number of people didn't give a WARN notice because they're like, oh, we're going to get through this, it's just going to be like 2 months. And if then there's like, hey, it's going to be 3 months. And then, depending on how things work out, we're going to hear from our great speakers on the PPP, how things work out. If they don't work out so great and they can't come back, you're going to have to think about doing a WARN notice. And that doesn't mean you're going to have to pay people more, but there are violations for not actually just providing these types of notices, which typically go to the affected employees and then the state unemployment office. So think about WARN and that 6-month little time clock. In terms of the people who I'm hearing from who are starting to recall people because they got their PPP funds and they want to spend them and get that money out in the economy, the way that you recall people can actually create liability, just like the way you lay off people. So if anybody has engaged in layoffs, you know, what we look to do is make sure that we're not having a disparate impact on any protected class that is for any illegitimate or non-job related reason. And so I talked to a client who was in their layoffs, they were laying off every single pregnant employee, of which they had 6. And, you know, even though it was for very good work-related reasons, I just, you know, we just decided we moved one over. And so hopefully if you were involved in those decisions, you've been through that already. If not, if you're going through them, when you're looking at doing reductions in force and you're sort of debating some of those issues, one of the best things you can do is engage counsel, because then the discussions become attorney-client privilege or work product privilege, so that you can have that free and open discussion about who's in which box and use Excel spreadsheets that are not discoverable later. So I would encourage you to do that. But just like there's risk in saying, okay, who's furloughed, there's risk on who's being recalled. So some people might say, okay, well, you know what? I'm going to recall all the people under 30 in my office because they're at less risk. And we'll do them first, and that'll give our older employees more time to stay at home and be safe. Sounds awesome, sounds altruistic, sounds like we're following CDC guidelines, sounds like age discrimination. And so even though you think you're doing it for the right reasons, you really can't make those choices for those people, because they actually may want to come back to work, especially if their salaries make them more than the unemployment benefits they're receiving. And so you just need to be aware. Also, if you wanted to call back, you know, all the guys first and the women weren't being called back. So look at recalls the same way you look at layoffs, and just make sure that there are not any explicit or implicit biases in the way that you do it, and you can really back up how you do it. Some people are asking for volunteers first and sort of staggering it in that way. That's not a bad thing to do. Some people were asking for volunteers for layoff, and that also isn't a terrible thing to do. I'd want to talk with people specifically about what happens when everybody or nobody volunteers, but those are all issues that you might be facing about recalls. One of the other difficulties with recalls is what we're seeing is because of the great expanded unemployment benefits in Virginia under the CARES Act, it's hard getting people to come back, because any employee who is making, you know, under $19 an hour actually makes more money on unemployment than they did when they worked a 40-hour week for you. And so they don't want to come back so much, or at least some of them don't. Some of it's for bona fide reasons, some of it isn't. And so I do think that will be interesting to see how that plays out. Currently, those expanded, so in Virginia, your max unemployment level is $378, and the CARES Act added another $600 to that. Currently, that expires at the end of July. The HEROES Act actually, which was introduced in the House by the Democratic majority, actually seeks to expand that. I don't think that's going to happen, because I think the word is getting out that people are not being recalled because they're receiving so much more money on unemployment. So that it'll be interesting to see how that happens. But for the people who you're trying to recall who don't want to be recalled, if they say it's just because of the money, that's not a legitimate basis. And so I've talked to my clients about, well, what do we do with this? So I have them, one, give them a recall notice in writing, either by email or follow up by mail. In that, you know, recall notice, I advise about certain language, you know, reminding them about unemployment benefits. And if you don't know this already, when an employee is on unemployment, they have to make a weekly claim. And so every week they go online or they call a number, they're asked if they've been offered employment and have they declined it. You know, if they lie, that's fraud, number one, that's a crime. But two, if they say yes, then the VEC will look into why they did it. And if they're stupid enough to say, because I make more money, they should be denied further unemployment benefits. What they're not typically saying that, sometimes they are, but in the CARES Act in particular, it has a provision that if an employee refuses a recall because of a higher than average risk of COVID complications, that may be a justifiable reason for refusing recall, such that they'd still be entitled to unemployment. Now that's different. Their entitlement to unemployment is different than your obligations in terms of the ADA or the continued leave of absence. But in a world where I'd like to say, well, that's fine if you don't come back to work, but you're not going to be entitled to unemployment, so that, you know, $1,000 a week you've been getting, you're not going to get anymore, and you're not going to get a paycheck. Unfortunately, that may not be the case. And I would expect that the Virginia Employment Commission to be pretty liberal with that. I would like them to require medical documentation. And what'll be most interesting to me, I think if you've got medical documentation of your own articulated comorbidity or condition that makes you more at risk, I think that you're probably going to be entitled to it. The harder question, I'm going to be very interested to see what happens, is when you live with somebody who has a condition. And so you're worried about going to work and bringing it home. You know, typically that the VEC has been somewhat flexible about your inability to work because of your own personal medical condition, but not so much about the other people you live with. So that will be interesting to see about unemployment eligibility. And so, which then brings us to issues of ADA and FMLA and even FFCRA leave. So say you say, hey, we're open, come back, we're going to go on Monday. You got a lot of different things you got to think about if they say, I can't because. And of course, the because is, I got to know. But if it's because of, I've been advised to self-quarantine because my husband, you know, has lupus, or, you know, or I've had chemotherapy, you know, whether it's myself or somebody else, that's probably going to be, if you're an FFCRA covered employer, you're going to give them right out of the chute, if they haven't used it already, their FFCRA emergency paid leave. After that, you're done with FFCRA for COVID-related medical reasons. If the reason I can't come back is childcare, then that's going to be FFCRA, and then it's going to be the expanded FMLA under FFCRA, which I'm hoping you all know. The person gets paid 2/3 of their regular wages, and it's a tax credit situation. So you are paying it, but then you're not having to pay the government certain taxes. So it is sort of a pass-through that you're not personally funding.
All right. Hey, Kathy?
Yeah.
Yeah, we're going to try. Well, no, you actually just hit a couple of questions that have popped through already with, you know, trying to bring back an employee.
Okay, well, let me just say one more thing. I just got to say one more thing. So with all of these different ADA, FMLA, all the alphabet soup, and I said, if people complain about something before you fire them, please call somebody, because all of these laws have anti-retaliation provisions. And there's a little nugget called the National Labor Relations Act, which applies even in non-unionized businesses. And it says, hey, if I engage in concerted protected activity about the terms and conditions of my employment, which include how I'm paid, if it's safe, that's a whole other thing. So I'm just saying it's going to be a lot on employers in terms of, you might have that's insubordination, that's they're quitting their job, that's this, you know, you really need to talk to somebody before you make decisions like that. Okay, now stop.
Okay, and there are a couple other questions related to that, so we'll jump back into those at the very end. But let me go ahead and turn it over to Jeff right now and talk about, again, some of that liability, which again, we'll roll into some of the things you've already discussed. So, Jeff?
All right. Hello, everybody. I'll try to be brief, and I'll touch on at least some aspects of the first question that's been raised. I was going to talk a little bit about the PPP loans. As many of you know, today is the deadline for the safe harbor. There's been a lot of concern that some businesses applied for these loans in the sort of frenzy to get in the queue to receive one that may not really have been qualified, may not have been the type of business that was intended to benefit from the program. A couple of things to keep in mind. One is, yesterday, additional guidance was issued, and this is critical. And the guidance is in the form of an FAQ. It's available online. And the key guidance here is in question and answer number 46. If you haven't seen this yet, you had to certify, an applicant had to certify in good faith that the current economic uncertainty made the loan necessary to support the ongoing operations of the applicant. And there was some concern, particularly with larger businesses with access to other forms of liquidity, whether that was really a certification that was made in good faith. The guidance that came out yesterday said that any borrower, together with its affiliates, that received a PPP loan or loans in the aggregate principal amount of less than $2 million is presumed to have made the certification in good faith. And so obviously for many of our clients, many of our businesses, that will relieve that anxiety that many people were feeling as to whether or not they should make use of the safe harbor. Our advice is, if you're a business under that $2 million threshold, and that was informal in the advice up to this point, but it's become formal, that if you're under that $2 million threshold, you're probably fine as far as going ahead with the loan and not availing yourself of the safe harbor. The second point is, even if you're over that threshold, that doesn't mean you should necessarily, or a client of yours should necessarily return that loan. One of the key factors is going to be availability of capital, liquidity from other sources, line of credit, borrowing capacity, those sorts of issues. Really any analysis that you can show that was made at the time the loan was underwritten to show that specific need, I think is relevant to this conversation. So it's not to say if you're over that threshold, you need to use the safe harbor. It's to say that you really need to engage in that very fact-specific analysis if you're over that threshold, because you will attract the attention, but it doesn't mean you won't have an answer to give if the question is posed. And that's kind of a top line in everything I'm going to say today. There's a lot of "it depends" in all of this. It depends is the lawyer's favorite answer. And in these questions, it depends will often be the answer. And so because of that, I would echo what Kathy has said, which is consult with counsel, consult with professional advisors when in doubt. The other thing I'll say quickly about PPP, and this is in response to Stu's question, and I'll speak to it from the PPP side, and I'll let Kathy speak to it from the side of employment. As far as employees who refuse to return to work, and part of the reason that's so critical for employers is not just that maybe you need the bodies, but you've received a PPP loan and you're looking to maximize your forgiveness, and you don't want that to be impaired by not maintaining your employment numbers. If you offer employment and an employee refuses to return, that will not affect your PPP forgiveness numbers or matrix, as long as you make a good faith written offer of rehire and that the rejection of that offer is also documented. So again, piggybacking on what Kathy's saying, document your analysis, document your communications, document the employee's decision. But in that context, you can make the offer, you can document it, and if you do that, then you're sort of equipped to answer the question when the time comes, why you qualify for the forgiveness, even though perhaps your employment numbers were not maintained where they should have been. And that is going to be a problem. There's no getting around it. You'll have employees that either don't want to come back, that want to shift to the child care on the FFCRA, or for whatever reasons, are going to be reluctant to come back. And again, documenting your offer, their decision, is something that you can use to preserve your loan forgiveness under the PPP. And that's, I think, tremendously helpful, because there's been a lot of anxiety about that, both on the front end, the qualification question, and are we going to get dinged by the SBA, and on the back end, the forgiveness question. The other thing that's worth identifying on the PPP, which is a tax issue, and you may have heard knocked around, the tax issue on that is the legislation clearly said that any forgiveness under PPP should not be treated as cancellation of debt income. However, the IRS has sort of, in a back channel sort of way, negated that. Certainly that would be my view. The IRS has said, well, no, we won't consider debt cancellation of PPP debt to be COD income because the statute doesn't allow us to do that. But we are going to deny a deduction for any expenses that are paid that would otherwise be deductible using PPP proceeds. That has the effect really of making it a taxable event. I mean, you can say we're either tagging you with income or denying a deduction. Economically, if you do either of those, the effect is the same on the total taxable income of the organization net of expenses. There have been both basically complaints to the IRS, encouraging them to withdraw the guidance, and there's also legislative efforts to roll that back. The concern being those legislative efforts may become part of a broader compromise or failure to compromise between the Senate and House. And if the Senate and House can't compromise, it's likely that technical correction may be a casualty of that sort of partisan debate. But that's an issue with PPP that's out there. As far as the guidelines for the PPP forgivable portion matrix, we also are seeing contradictory information. I would just keep looking at the SBA FAQ as that gets updated, and that's been updated very regularly. And particularly as we get to the end of the first 8 weeks, which we're approaching, I think we're going to see some updating on that. That's I think a quick touch on the live issues on PPP. I want to talk about liability on opening. I think Kathy's done a great job with the employee question. How do we deal with employees? So I won't really spend a lot of time with that. Again, I would echo her, look at industry-specific guidelines and regulations first. And then beyond that, we're going to have to look at workers' comp for the employees and whether there is any regulatory or legislative change to make a presumption with regard to COVID being work-related. Because again, what you find is you've got the, it's section 401 of the code, limits the degree to which ordinary diseases of life, as they're described, are covered under workers' comp. I would be interested, my question for Kathy is, if the finding is that the COVID is an ordinary disease of life that's excluded from workers' comp under section 401 of the statute, does that mean that the exclusivity in the bar does not apply to that employee? Or does the employee then, since they don't have rights under workers' comp, then have their common law rights? And I don't know the answer to that. I'm not an employment lawyer. That's one of the things that I was thinking about as far as if basically it's excluded from workers' comp based on section 401, does that mean the employer doesn't get the benefit of the bar under 307? And I think I know the answer to that, but I'd love for you to speak to that. As far as non-employees, that's a separate question. With non-employees, and Kathy alluded to this standard, a business owes to its customers and other invitees a standard reasonableness sort of negligence standard that you have to engage in ordinary care. You're not an insurer of their safety. But unfortunately, the ordinary care is a very fact-specific analysis. And we're in a situation where there's not a lot of clear guidance. What I would say to that is, and I would echo very quickly what she has said, I think it's worth doing an important sort of top-down analysis of the specific facts of your business. Do you have members of the public coming into the business generally? How many? Do you need to limit the numbers that can be present in the business or that can be present in any particular location? What are obligations that you're going to place on both your employees and your invitees as far as the use of PPE? How often are you going to clean? And what additional efforts are you going to make to sort of sanitize work areas or areas where the public is present? One thing that people have talked about is if you're in some sort of manufacturing, if you want to have the same number of employees, do you have to add a shift to basically reduce the number of employees present at any given time? Do you want to keep track of the number of individuals coming into the business and leaving? All sorts of fact-specific analysis that I think if you engage in, and again, I think Kathy's exactly right on this, if you can show that you've engaged in that intentional and deliberate analysis to mitigate risk, that is going to help you on the back end if you have to justify your practices because someone's bringing a claim based on some claim that they have been exposed to COVID at your establishment. In all of that, Virginia Department of Health guidelines, CDC guidelines, all of those are going to be very valid and relevant to sort of guiding your action. And to the extent that you don't abide by those, although there may be some limits on admissibility, certainly a plaintiff will try to use those to basically say that you were not reasonable, and there'll be a fight. And so to some degree, abiding by those guidelines is probably one of the ways you can try to sort of cofferdam and cabin your risk. Very quickly, and I don't have time to even begin to go into this, when we talk about risk and liability, you should always be thinking about insurance. You should be talking to your insurance broker. You should be looking at your policy language. You should be talking to your attorneys about potential coverage. Some is more limited than we like. Business interruption coverage usually only runs along with property damage that makes a particular facility uninhabitable. Generally, that has not extended to this type of exposure type claim, although again, it can depend on the policy. Some policies have inclusions or exclusions for communicable diseases. You want to look at those. One policy that tends to be a bit broader is commercial general liability, but that's only going to apply to your liability to third parties. It's not going to give you business interruption. It's not going to help you vis-a-vis, in most cases, your own employees. So looking at your insurance very carefully, I think, makes a lot of sense. And when it comes to insurance, you want to notify your carrier if there's a potential loss promptly. You want to be consulting with your advisors and your broker, and you want to document everything. Even if there's some question about whether you have a good claim vis-a-vis the insurance provider, document your losses, document your mitigation, document any threatened claim, so you're in a position, if you do have coverage, and there may be some question about that, to ensure that you've protected your rights. Keeping in mind too, sometimes the insurer will defend you with a reservation of rights, and that alone is a point gained because you get the benefit at least of that defense, even if the carrier hasn't committed to covering a potential loss. With that, I don't want to get into the time of the other folks, but I'm happy for questions at the end. Sorry if I worked through it quickly. There's a lot there to cover in such a short period of time.
Oh no, that was great, Jeff. And the answer, which we are all assuming we heard or would have heard through a lot of these presentations, is it depends. It
depends. Talk to your lawyer.
But it's also about money. So let's shift gears to Kurt and Derek, and y'all can talk a little bit about money and some of the implications that we've got going on with the COVID-19 situation.
All right, thanks, Frank. I'll start things off. So, when the COVID crisis first kicked off, PB Mayors responded by putting together a team of people to make themselves as familiar as possible with the provisions of the CARES Act. And lately, we've been focused a lot on helping our businesses remain in business and get ready to open back up. And we've been receiving a lot of common questions. So our presentation, we kind of put it together just as an FAQ. I'm going to be handling some of the frequently asked questions we're receiving from companies who have not yet applied for a PPP loan. And then Derek is going to handle some of the most common questions we've been receiving from companies that already have a loan. And they're starting to talk about how to spend it and how to track expenditures for forgiveness. We will touch a little bit on other funding options beyond PPP, but most of our presentation kind of is focused around these PPP questions. So we do have some familiarity with some of the other programs. So if anybody has any questions about those, later on, they can feel free to ask them too, and we'll be honest with you whether we know the answer or not. So, So we sent some slides. I don't know if they're up or if I should just read through the list of questions.
I will go ahead and put them up now.
All right. You want me to put them up?
I got you.
Okay. I panicked for a minute. I was like, I don't know how to put them up.
Maybe. Hold on. Sorry about that.
Problem.
Here we go.
Great. All right. So this is just the cover. So we can skip to the next slide there, and one more, and then that should populate the first question. I haven't yet applied for a PPP loan. Do I still have time? So according to the SBA, last Friday, there was still $123 billion remaining to be lent in the program. That's expected to go pretty fast. So if you think that you have some interest or desire to apply, you should do so as fast as possible. Technically, the deadline to apply is June 30th, 2020. We do expect that the money's going to run out well before that. So if you're thinking that you want to apply, you need to get on the ball right away and reach out to the right place to make an application. Which leads us to the next question. What's the application process? The SBA has been issuing guidelines and updating procedures to its approved lenders constantly throughout this process. So when you do apply for a PPP loan, you're going to find there's still some variety in what's being asked of the borrower to produce as far as what you need to show in order to be issued a PPP loan. However, you should be ready to attest that your business has been affected by COVID-19 due to the current economic uncertainty, and that the loan request is necessary to support the ongoing operations of you as the applicant. You'll also need to be prepared to provide things like your articles of incorporation, tax ID numbers, payroll records, tax returns, bank statements, invoices, 1099 data for independent contractors and sole proprietors, things like that. We've been told the best place to start when applying for one of these loans is with your current lender. Some banks we've heard are only working on PPP loan applications with existing bank clients that have already have a pre-existing relationship with the bank. But, if your lender's not issuing these new loans, you're able to apply to any of the SBA approved lenders, and there's a list you can find on the SBA website. So let's move on to the next question, please. What portion of my loan will be forgiven? It depends on how much your loan you use to pay employee compensation during the 8-week period, beginning the moment you receive the loan proceeds. At least 75% of your loan that you spend must go to compensation to be forgiven. But if you use a higher percentage of the loan for compensation, you can claim that higher amount for forgiveness. A maximum of 25% of the loan can be used to pay mortgage interest, rent payments, and utility payments, with all agreements being in place before February 15th, 2020. So, don't go out and get a new mortgage and expect to be able to use the PPP loan to make those payments. Next question, what if I don't get full forgiveness? Whatever amounts aren't forgiven will stay as a loan. The loan term is 2 years and the interest rate's 1%. The first loan payment is due 6 months after the date you receive the loan proceeds. Just remember that you can only spend the money on expenses approved by the CARES Act. Now, we do anticipate that there's going to be some further clarification on what you can spend the money on. Once it moves into the loan stage, it doesn't get forgiven and it stays as a loan. We think they're going to expand or make the rules a little bit more liberal around what you can spend those loan proceeds on. But as of right now, we don't have much clarification in the way of what you can spend them on beyond the original approved expenses for the forgiveness program. So be a little bit careful about what you spend those loan proceeds on. Next question, do I have to hire back every single one of my employees? This is an area that still needs to be clarified by the SBA. However, hiring a full-time equivalent number of employees to be similar to the number of full-time equivalent employees that you had before receiving the loan is generally considered to be a best practice. Please note that you don't have to hire back the same exact individual employees. Full-time employment and wage equivalency are the important factors when we're talking about the forgiveness angle. Next question. What if I get my PPP loan funded, but I can't remain open because the state locks back down again? There's a lot of concern that the state's going to start to put the brakes on if you know, the number of infections in the state start to rise. What we do know is that there is no penalty for early repayment of the loan. We presume that the unused portion of your loan proceeds can be used to pay off any portion of your loan that doesn't get forgiven. We're still waiting for clarification on remainder amounts and how to use them from the SBA, but it might be prudent for some businesses to only spend the PPP loan proceeds on forgivable expenses for this reason. Next question. I'm reluctant to take a PPP loan because I've heard some nightmare scenarios about post-PPP loan audits conducted by the SBA. Like Jeff mentioned earlier, just yesterday, we got word from the SBA that borrowers of less than $2 million from the program are not going to be audited. We're hoping that relieves some of the anxiety a lot of people who have kind of been waiting on borrowing from the SBA. Hopefully that makes them feel a bit more comfortable about taking the loan, in that unless there's some other external factor that triggers an audit, that doesn't look like the SBA is going to go back and comb through these loans for $2 million or less. So hopefully that clarification we got yesterday will do a lot to alleviate some of the concerns about having to justify your need for the loan once the dust settles. I think those are all the questions I had to cover. So I'm going to turn it over to my colleague Derek, and he's going to take over from here.
Hey everyone, so Kurt touched on a lot of the questions clients and are asking us for when they don't have the PPP loan at the moment. I'm going to touch on some of the questions we're being asked for clients that do have the PPP loan and what kind of steps are necessary for this next forgiveness process. And of course, the whole context of our conversation today is around, reopening the economy and opening businesses back up, and how does that affect employment, and what does liability look like in those situations? Well, the first question we have are, what are the employment requirements for forgiveness? When I get this question, I typically bring up, what's the intent of the program? The intent of the Paycheck Protection Program is really to maintain ongoing operations with emphasis on payroll costs and keeping people employed. That's why the legislation is in place that requires 75% of what is spent to be used on payroll costs. Now, there are two stipulations that come with that are around forgiveness reductions. And I'm going to touch on those briefly. And one way that your forgiveness can get reduced is really if you reduce the number of full-time equivalents you have on payroll, generally relative to the amount you had employed before you received your loan. And the second way you can get forgiveness reduced is you decrease the salaries and wages of any employee that earns less than $100,000 by 25% or more. So those are the two things you have to navigate when making these decisions and ultimately going through this forgiveness process, how much you want to choose or where do you want to spend your money. Oftentimes when I have these conversations, a lot of times I ask the client, how much do you value this forgiveness? And a lot of people are saying, well, this is the closest thing to free money in this day and age, and that's absolutely true. But what this stimulus bill and CARES Act only does is provide funding for the next 8 weeks. And what we don't know, of course, amongst plenty of things with this COVID-19 situation, is how long it's going to affect businesses. Sure, it could affect you for the next 2 months and you'd be back up and running, but what happens down the line, maybe 6 months down the line, 12 months down the line? We often remind clients that whatever you don't get forgiven is converted into a traditional loan, as Kurt alluded to. The terms are, again, 2-year term, 1 year, 1% interest rate, deferral of payments for first 6 months, no prepayment fees, no collateral required, and no personal guarantee is required. So it's one of the more favorable and affordable loans you have at your disposal. So it's a lot of people get focused on this forgiveness piece, but there is that piece that it may provide some additional liquidity down the road should you not have to spend all your proceeds today. And moving on to the next question, what are some best practices to start getting our workforce in place as businesses start to reopen? Well, there's two main issues here, and we've touched on a lot of those already. One is, what if people are earning more money on unemployment than they would if they came back? Another one is, what if these employees don't want to come back because of health concerns? Well, we've touched on the guidance from the SBA that if a borrower makes a good faith written offer to rehire an employee and offers them the same hours and the same compensation as they had previously, and if the employee does reject that, you must document that. And then if you do that, your forgiveness won't be reduced. And that's very important, because if they do reject that offer, we of course want to know how that affects their unemployment. And Kathy did touch on that a little bit. And so that's still a gray area in terms of how that process might look and how exactly things are documented. Another area that you can, figure out what employees to bring back is, Kurt alluded to this as well, but you don't need to bring back the exact employee. A lot of people think you have to bring back the same person, the same hours, the same compensation. But really, it's all that matters is you're maintaining that full-time equivalent equation. One thing that's kind of unique that I came across is that because people have received this PPP loan proceeds, a lot of the expenses you would normally pay in terms of payroll, mortgage interest, rent, and utilities are being paid with a loan. Maybe that frees up some cash flow on your business fund side that you may be able to offer some sort of small bonus or retirement benefit with your business funds account rather than the PPP funds to encourage people to come back. It all, of course, depends on your cash flow and, of course, your cash flow forecasting. But again, once this 8-week period ends, there's no requirement that you have to keep these employees back on through the end of the year or for another 8 weeks. If things are still looking rough, you're able to lay off people again, put them back on furlough, but we don't know what kind of stimulus will come out in the future. Last question I really have are, what do you need to prepare to meet with your bank and apply for PPP loan forgiveness? Generally, from the SBA, they've said you need to submit an application to your lender. That includes documentation verifying the number of full-time equivalents and their pay rates. And you need to include additional documentation for any mortgage, rent, and utility payments made for those that were in place before February 15th, 2020. And then lenders have 60 days to issue a decision on your forgiveness and for your forgiveness loan application. Now, SBA has general guidelines as to what this process looks like. Granted, they're minimal at the moment, and we're hoping to get some more in the next few weeks. But it's likely that banks will have varying requirements, they'll differ in a few ways about what documentation they may require when applying for forgiveness. So it's best practice to get in touch with your PPP lender to know exactly what they imagine that process is going to look like, so you can prepare now. And those are the main questions that I've been getting in conversations. Again, this is a very high level overview of some of those questions, but I want to touch on a few of the different additional relief options that we're communicating to clients as well. I'm not going to dive down into extreme detail, but these are just some things that people might be able to explore. Number one is negotiating your current credit facility terms, and that might be any line of credits that you have, any other credit facilities available to you. Might be worth it to look into whether your banker is allowing deferred payments in any way, maybe going interest-only payments for a time. It also is a good idea to look into opening a line of credit or drawing on a current one. If you're a U.S. agricultural business, the EIDL is restricting applications to those falling in that industry. So that's also an option for you as well. Main Street lending program with the Fed that has been introduced as of late and is now available to businesses below 500 employees. And for people that don't have the PPP loan or won't be pursuing the PPP loan, there's an alternative called the Employee Retention Credit. And then another option most people that I talk with are utilizing is the deferral of payroll taxes for the year 2020. And those are just a few other options out there for people that, all they hear about is the PPP. What else can help me? And that's all we have for a high-level overview of the PPP if you don't have the loan now and if you do have it.
Kurt, Derek, thank you. We appreciate all that as well. Again, there's a lot of information that's been given here today. I know there were a few questions that came by. I think most of those were probably answered. If not, maybe someone will throw another chat up. And Kathy, yep, you had an answer, or you had some additional information on some of those?
Yeah, so I wanted to respond to Jeff's question about whether there's an end run for COVID or other conditions if they're excluded from compensability. There really isn't, because there are a lot of other conditions that are excluded and are not covered. A lot of cumulative trauma injuries, de Quervain's, tenosynovitis, rotator cuff tears, that kind of stuff. And so I think it would just fall into that bucket. So I'm not worried about that. I do think, if the General Assembly creates the presumption for COVID, they'll amend a part of the compact that talks about the presumption for police and for ambulance. And if they add healthcare providers, they could also add retail. There's a push for that, or meat packing. So hopefully that won't get too crazy, but they could create a presumption on the act, but it does not exist now. The other thing I wanted to touch on briefly is I get a lot of questions from my clients about using PPP funds to pay for people who aren't actually working. And I think there are ways, and I'd be curious if our other speakers agreed. So for example, say you're a restaurant and you're not really fully up and running, but you receive the PPP and you want to give it to your servers, but with the curbside and whatever, you're really only scheduling them, maybe 2 days a week. Well, you can create a COVID paid leave pay category. And so Kathy might work, and actually earn my wages for 2 days. And then if I was your full-time employee before, and now I'm going to receive 3 days of paid leave, that serves the purpose, which is to get it out to the employees, get it out in wages to them. And it helps you meet your forgiveness because, again, you want to get them up to those levels of payroll. And I do know employers who are offering higher rates of pay to come back, or bonuses to come back as well, to sort of incent people. The other thing that I wanted to just mention as a business liability issue, and to hear maybe a little bit from Jeff about this, is liability waivers for your customers are coming in, the public. Pros and cons, nothing's, panacea. We lawyers pick apart everything anybody writes anyway. But, whether you should be having customers sign an assumption of the risk waiver of liability form. So I think that would be good. And then, so I'd like Jeff to talk about that. And then also indemnification agreements. You say you have indemnification agreements, you're a vendor. I do work at Capital One, and my people go in and spread COVID all through Capital One. Is now Capital One, who's got to shut down because of that, going to sue me under a contract because of maybe I knew or should have known and didn't take steps. So I do think that to begin with, there's going to be fights between employees and employers, and then there's going to be insurers, as there already are, and insurance, and then it's going to be business to business. So a lot of stuff that way. But Jeff, what are you thinking about liability waivers these days?
As far as waivers with the general public, I'd have to think about that. I think practically it's going to run in two directions. It could frankly be very off-putting to the public, and just as a business proposition be really problematic. Just as a business proposition. That said, to the extent you have them, it may be a practical disincentive to a lawsuit, just because the person knows they signed a waiver, they don't know whether or not it's enforceable. I think a lot of, and here I'm just getting in the heads of circuit court judges around here, I think the contract of adhesion and public policy concerns with those that I think a clever circuit court judge who wanted to set it aside could find in order to do that are significant. And so I hadn't given that a lot of thought, but I'll have to noodle that a little bit. But I'm a little more skeptical of that than indemnification business to business. There you have sophisticated parties who are not really engaging in what we would generally consider to be the kind of contract of adhesion with an unsophisticated member of the public. I think those are more likely to be a deterrent and also more likely to be upheld. And there, it's more of an allocation of the risk than a waiver of risk in a way. It's each company, in a sense, allocating risk between them in their business relationship. On a gut level, I think that's more likely to be enforceable, but I'd have to think about the other. I mean, to some degree, principles of assumption of risk already apply. I mean, frankly, even if I don't have that waiver from a member of the public, if I had some retail establishment and someone got COVID and wanted to sue me, I would attack that in two ways. I'd say, on the one hand, you're aware that there's a generalized and heightened risk of a communicable disease. You knew that when you left your front door well before you entered mine. And so there'd be that piece, as well as, and oh, by the way, because I was aware of it, these are the reasonable precautions I took in order to ensure that I was not exposing you to an unreasonable risk. So I think I would be throwing an assumption of risk defense out there anyway, even in the absence of some sort of waiver to a member of the general public. And to some degree, and this begs the question, do you in your retail establishment require invitees to use PPP, such as gloves or masks? But to the extent that that person didn't, then you're also saying, look, you were aware of things that you could have done to mitigate your risk that you chose not to do. So I'll have to think about the waiver issue, but those generalized arguments are certainly out there, whether or not the waiver's there for assumption of risk, I think. The other thing is, I think it's particularly difficult for invitees as opposed to employers, because I can see a fact situation where an employee says, look, I was hunkering down at home. I went nowhere. I gave up the rest of my life, but my employer said, I want you to come in. And I went in, and sure enough, I got COVID. And that's the only possible locus where I could have received this infection. Whereas if someone's generally going to retail establishments, I think the retail defendant, has some risk to say, look, you're out in the world, and we don't know where else you are in addition to our store. We're not requiring you to be in our store. And so your ability to prove that you got this infection in our store, we just think you can't get over that burden of proof.
Thank you. That's some really good information. And again, it answers a lot of questions to a degree, because then a lot of that still is, if your best practices, you're taking all the precautions you can. I mean, that's all you can do. You can do all you can do, and then, see what happens after that. But again, if you're making a sincere effort, again, I think most people understand, most reasonable people would understand that. I know we told everybody about 2:15, so I will go ahead right now and thank you, Kathy and Jeff and Kurt, Derek. We appreciate that information, the time you've given. We still have quite a few people online, so I'm sure that if they have any questions, they can, again, send those directly to you or contact. We'll get your information. Make sure we get that out to everybody. Matter of fact, I think it was on one of the slides, we're starting with anyhow. So again, let me go ahead and thank the chambers down in Letch Rock and Greater Augusta, Shenandoah County, and of course our Harrisonburg Rockingham, our business support task force, and everybody else who has been working on this basically almost nonstop for the last couple months. It's everything's been moving very fast. Hopefully everybody got some good information out of this, and hopefully everybody will stay safe, and we'll be open up fairly soon. So stay safe and be smart out there. And again, thank you all very much. And
thank you.
Thank you.
We will see everybody later.